Hey, what's up guys? Welcome back to my channel, where I share with you the best tips and tricks on how to grow your wealth and achieve financial freedom. In today's video, I'm going to tell you why you should not keep your cash in the bank, and what are the 6 assets that are better and safer than cash. Sounds crazy, right? Well, stick around, and I'll explain everything. But before we get into that, make sure you hit the like button and subscribe to my channel if you haven't already. And don't forget to turn on the notification bell so you never miss an update from me. Trust me, you don't want to miss this. Alright, let's get started. So why should you not keep your cash in the bank? Well, there are 2 main reasons: inflation and opportunity cost. Let me break it down for you. Inflation is the decrease in the purchasing power of money over time. In other words, it means that your money is worth less and less as time goes by. This is because the prices of goods and services tend to increase over time due to various factors such as supply and demand, production costs, government policies, etc. For example, a loaf of bread that cost $1 in 2010 may cost $1.50 in 2020. That means you need more money to buy the same amount of bread in 2020 than in 2010. This is inflation. Now you may think that inflation is not a big deal because the bank pays you interest on your savings, right? Well, not really. The interest rate that the bank pays you is usually much lower than the inflation rate. For example, the average annual inflation rate in the US from 2010 to 2020 was about 1.8, while the average annual interest rate on a savings account was about 0.1. That means that if you had $1,000 in your savings account in 2010, you would have $10 in 2020, but the purchasing power of that money would be only $917. That means you actually lost $83 in real terms. This is called negative real interest rate. So keeping your cash in the bank is actually losing you money in the long run. But that's not all. There's another reason why you should not keep your cash in the bank, and that is opportunity cost. Opportunity cost is the value of the next best alternative that you give up when you make a choice. In other words, it is what you could have earned or gained if you had invested your money in something else instead of keeping it in the bank. For example, if you had invested your $1,000 in the stock market in 2010, you could have earned an average annual return of about 10, which means you would have $2,594 in 2020. That means you missed out on $1,584 of potential profit by keeping your money in the bank. This is an opportunity cost, so keeping your cash in the bank is not only losing you money, but also preventing you from making more money. That's why you should not keep your cash in the bank, and instead invest it in assets that are better and safer than cash. But what are those assets? Well, here are 6 of them that I recommend. Number 1, gold. Gold is one of the oldest and most trusted forms of money in human history. It is a scarce, durable, and portable asset that has maintained its value for thousands of years. It is also a hedge against inflation, currency devaluation, and geopolitical risks. Gold is considered a safe haven asset, meaning that people tend to buy it when there is uncertainty or turmoil in the world. For example, during the COVID-19 pandemic, the price of gold surged to a record high of over $2,000 per ounce in August 2020. The average annual return of gold from 2010 to 2020 was about 7.5, which is much higher than the bank interest rate. You can buy gold in various forms, such as coins, bars, jewelry, or exchange-traded funds. Number 2, Bitcoin. Bitcoin is the first and most popular cryptocurrency in the world. It is a digital, decentralized, and peer-to-peer form of money that is powered by blockchain technology. It is a scarce, divisible, and transferable asset that has no central authority or intermediary. It is also a hedge against inflation, currency devaluation, and censorship. Bitcoin is considered a revolutionary and disruptive innovation, meaning that it has the potential to change the way we transact and store value in the world. For example, during the COVID-19 pandemic, the price of Bitcoin soared to a new all-time high of over $40,000 in January 2021. The average annual return of Bitcoin from 2010 to 2020 was a whopping 230, which is incomparable to any other asset class. You can buy Bitcoin on various platforms, such as exchanges, wallets, or peer-to-peer networks. Number 3, real estate. Real estate is the physical property that consists of land and buildings. It is a tangible, durable, and productive asset that has multiple benefits. It can generate income from rent, appreciation from capital gains, and tax advantages from depreciation and deductions. It can also provide utility, security, and comfort to the owner or occupant. Real estate is considered a stable and resilient asset, meaning that it tends to retain its value and demand over time. For example, during the COVID-19 pandemic, the U.S. housing market remained strong and even saw an increase in sales and prices. The average annual return of real estate from 2010 to 2020 was about 8.5, which is higher than the bank interest rate. You can buy real estate in various ways, such as direct ownership, mortgages, or real estate investment trusts. Number 4. Stocks. Stocks are the shares of ownership in a company. They are a liquid, flexible, and diversified asset that can offer growth, income, and voting rights. They can also reflect the performance and potential of the economy, industry, and business. Stocks are considered a risky and volatile asset, meaning that they can have high returns but also high losses. For example, during the COVID-19 pandemic, the U.S. stock market experienced a sharp drop and a rapid recovery, reaching new highs in 2020. The average annual return of stocks from 2010 to 2020 was about 10, which is higher than the bank interest rate. You can buy stocks on various platforms such as brokers, apps, or robo-advisors. Number 5. Bonds. Bonds are the loans that you lend to a government or a corporation. They are a fixed income, predictable, and low-risk asset that can offer interest payments and principal repayment. They can also provide diversification, protection, and liquidity to your portfolio. Bonds are considered a conservative and defensive asset, meaning that they can reduce the overall risk and volatility of your portfolio. For example, during the COVID-19 pandemic, the U.S. bond market performed well and offered a safe haven for investors. The average annual return of bonds from 2010 to 2020 was about 4%, which is higher than the bank interest rate. You can buy bonds on various platforms, such as brokers, apps, or robo-advisors. Number 6. Art. Art is the creative expression of human imagination and skill. It is a unique, aesthetic, and cultural asset that can offer enjoyment, appreciation, and prestige. It can also represent the history, values, and trends of society. Art is considered a rare and alternative asset, meaning that it has a limited supply and a high demand. For example, during the COVID-19 pandemic, the global art market saw a surge in online sales and auctions, reaching new records and audiences. The average annual return of art from 2010 to 2020 was about 6%, which is higher than the bank interest rate. You can buy art in various forms such as paintings, sculptures, photographs, or digital art. So, these are the 6 assets that are better and safer than cash. Of course, there are many other assets that you can invest in, such as commodities, collectibles, antiques, etc. The key is to do your own research, diversify your portfolio, and invest for the long term. Remember, the best time to invest is yesterday, the second best time is today, and the worst time is tomorrow. That's it for today's video, guys. I hope you learned something new and valuable. If you did, please give this video a thumbs up and share it with your friends and family. And if you have any questions or comments, please leave them below and I'll try to answer them as soon as possible. And don't forget to subscribe to my channel and hit the notification bell so you never miss an update from me. Thanks for watching, and I'll see you in the next video. Peace out.